Hello, everyone. Thank you for tuning in and welcome to Lawson Connor's latest webinar on how to launch a hedge fund. I'm sitting here today with Andrew Frost, Executive Director, and Joe Woodbury, Director of Investment Management Solutions. Andrew and Joe, care to kick it off and introduce yourselves for the listeners?
Absolutely. Thank you very much, Alex. Good morning, everyone. I'm very pleased to be joining this webinar this morning. Great to be involved. I'm the Director of Investment Management Solutions here at Lawson Connor. And Andrew, over to you.
Good morning, ladies and gentlemen. It's nice to see some familiar faces or names on the participation list and some new ones alike also. Andrew Frost speaking. I'm the Executive Director of the Lawson Connor Group and lead our investment management practice, which is purely responsible for the launch of our fund business. Over the last 3 years, both Joe and myself have been involved with the launch of around 312 regulated businesses. So I think we're very well placed to host you over the next 25-30 minutes.
Excellent, fantastic. Well, let's kick things off then. I'd like to perhaps start by setting the scene, Andrew, for you. I'm a portfolio manager at Goldman Sachs Asset Management. I've been there for the last 15 years. I've had a decent run of success, a decent track record, but the time has come that I feel like it's the right time in my life to step aside and look at starting my own business, my own fund. I've got one colleague, one analyst who would potentially look to join me, and I've got a potential seed investment lined up from high net worth family office that I'm in good contact with, and I'm interested in setting up my own fund. So I'd really like to hear from you about some of the options that are available for me at this time.
Thanks, Joe. The good news is you're not alone. It's a very similar environment to what we've seen over the past 12 to 18 months, with many people taking that step to leap out of a larger institution and launch their own fund. I suppose if we look very high level at the options available to you, there's essentially two forks in the road. One avenue to achieve your goal of launching a fund is to get directly authorised with the FCA. Now that involves filling out an application form to become an investment manager and sending it off to the FCA. Fairly straightforward process at a high level. Now, it does take time. We're probably seeing in our experience currently around 6 to 9 months is a fairly good bell curve of how long that process takes. And it can be quite expensive, not so much purely on the application costs, but everything else that comes with putting your firm in a position to be approved as an investment manager, hiring fit and proper people in the various compliance functions that require to be in place, and building up a compliance framework and an operational infrastructure to allow you to be approved by the FCA. Option number 2, which we'll focus on a little bit throughout this webinar, is providing a hosted solution or operating underneath a regulatory hosting or a regulatory umbrella arrangement. Now, in contrast to you getting directly authorized, there are a couple of advantages in doing so. One is the speed to market in which you can get up and running and start managing a fund. We're roughly around 3 to 5 weeks is how long this process takes. You'll have a robust compliance monitoring plan and an experienced team in place providing policies and procedure, and it's considerably lower cost than going and getting directly authorized.
Okay, fantastic. Andrew, what's really jumped out at me there when you were just speaking was the elements around time to market advantage and the cost savings which this second hosted option would likely bring. That would be really important for me if and when I do decide to step aside. How does this route actually work practically?
Now, there are a number of factors at play when you operate underneath someone else's principal license. What will be important for me to highlight is essentially what that firm provides you and your business. Operating underneath a principal firm, you'll find that they will provide you with an ongoing compliance supervision and the risk monitoring process around your firm, let's call it XYZ Capital, and the relevant individuals that operate in a controlled function capacity. Now, I'll touch on a controlled function capacity in a moment. Many of you on the call may be CF functions with the FCA currently or have been in the past, so you may be familiar. Underneath a hosted solution also is the investment management requirements under AIFMD when we are looking at running a fund. So that principal firm will take on the portfolio and the risk management responsibilities and oversight of your fund. They will also handle the particular regulatory reporting requirements that the FCA require to be submitted via their Gabriel system. A big part of what that firm will also provide you is the compliance framework for you and your business to run a hedge fund. Things like a compliance manual, your policies and procedures that are relevant to your activities, and develop a robust compliance monitoring plan to oversee. We'll also ensure that there's a training and development program in place so that your staff remain fit and proper and continually adequately trained.
That sounds great, but what I'm not sure about, Andrew, is whether this is just going to be like a mirror of what I've done before. That the whole point of me stepping aside and setting something up my own is that I want autonomy and I want to run my own firm independently. I don't want to work for another firm.
Correct. And a big theme that we've seen in the market with portfolio managers coming out of larger institutions and established firms to set up their own businesses is a little bit around that. They're sick and tired of working in a very constrained compliance environment. Some of the investment banks at the moment, we speak to traders every week that they're spending 2 of their 5 days in the office sitting in front of risk committees and compliance panels, and they're leaving 400 basis points of performance because they're unable to trade their investment strategy in a way that's compliant on a larger firm standards. Importantly, with the option that we've discussed on a hosted solution, you gain full independence of your business. I'll reference XYZ Capital again. That's your firm. That sits on your business cards. That's your website. That will sit in terms of your branding and your perception, your messaging, and your identity to the outside market. Service providers will see you and your firm, your investors especially, who know you and have followed you in a previous life or as a portfolio manager at your previous firm, will recognize you in your firm as XYZ Capital. Okay,
you mentioned there about investors. That's obviously a really key point. If I am going to set up on my own, how is it that investors view this type of approach, both individual investors and thinking also about larger institutional investors as I go on to raise more capital?
It's a really good question. And if you don't have that question front of mind, then you're probably not thinking in the right frame. Raising money from when you launch a fund is absolute paramount, because without putting something forward that's investable from an institutional client base, there's no point in launching your hedge fund. What we've seen through principal firm and hosted solutions is it's a fairly tried and tested route to launching a hedge fund. We have seen a number of large investors and institutional investors from an operational due diligence perspective find it paramount that there's a framework and an infrastructure established and run by an experienced team. So if you think about you and your co-PM and possibly one analyst launching a fund by yourselves, it's very difficult for you to put forward a governance framework and an established substance behind you that will warrant. I'm not saying an institution is going to allocate $100 million to you in the first 6 months, but you'll certainly get that meeting. You will certainly get on the radar. You're wanting to put forward a very institutional grade product with an established framework and efficient processes from day one. It's not something you want to build into over 9, 12, 18 months. You want to be able to present as if you're an institution going in for a $2 billion mandate, because that's going to put you a long way ahead of the rest in the startup and emerging manager space.
Great, thanks very much. You've mentioned about 4 to 5 weeks in terms of runway required to set things up. What do I need to be thinking about during this entire process? What are the practical steps to get things off the ground? What do I need to give to you, or how do I need to engage with you to be able to move ahead?
A big part of these hosted solutions is an area that I imagine close to 90 to 95% of you on the call would not be over familiar with. And nor should you be. You should be concentrating on what you're good at, essentially generating alpha, creating returns, and raising capital for your strategy. What I'd like to do over the next couple of minutes is simply run through the steps and what's required to go from essentially day 1 to week 5, where you have a subscription document and bank accounts open and are live on the FCA register to start trading your strategy. Essentially, we're covering off these in 3 work streams. First and foremost, what's required is that you have a UK incorporated entity. Now, that can be a limited company, it can be a limited liability partnership. The FCA is somewhat agnostic to what your management company. Now, there are some important aspects for yourselves to consider on how you set up your corporate structure. But in terms of running a hosted solution, that is the first step that is required to appearing live in a hosted capacity. In most cases, that's a fairly fresh entity. So there's not trading history. There hasn't been liquidations 3-5 years earlier. It's essentially been incorporated in the last couple of weeks in most cases. Secondly, and probably most importantly out of these 3 work streams, is actually identifying people within your firm and within the project of your fund launch that are going to be conducting regulated activity. Now, that's not going to be everybody. That's not your graphic designer. That's not your office assistant. That's not the people that provide some research or analysis for you. These people essentially pick themselves. They are the people that are trading, providing deal origination, investment thesis to you as a PM, yourselves as portfolio managers, and importantly, those individuals that are out there in the market speaking with your investors and customers. You may be familiar with the controlled function 30, or as it's commonly known, the CF30 function. It's the most common regulatory controlled function and essentially ensures that you are a fit and proper individual to be conducting that form of regulated activity, i.e. you're fit and proper to be a portfolio manager. You understand capital markets, you understand mis-selling, you understand insider dealing and other important anti-corruption and bribery elements of a regulated firm.
Andrew, can I ask a question? If I was bringing on a colleague who's been out of the industry for a couple of years, he spent some time traveling, but he's looking to perhaps join me in the future, what would be the process for him going back on as, for instance, the CF30 if he was to join me?
Sure, and there's a fairly wide spread there. In that instance, Joe, we might look, or the principal firm might look at them, look at their CV, their relevant track record, and make a fairly subjective review on, is this person fit and proper? If they've worked in a professional standing previously, it might be a case that some training modules or some increased proficiency might be needed in various elements to be comfortable at putting them forward to the FCA. That being said, if you've been a used car salesman your whole life and now you want to run a hedge fund, fantastic. That's great news for the industry, though there's certainly going to be a level of training and competence that needs to be shown that evidences that you understand what it means to manage people's money in a corporate and regulated environment. To finish off this slide, the third work stream there at the bottom is essentially making your business compliant. So what does that mean? That's a principal firm will provide you and your business with a compliance manual. It will develop the training and policies and procedures that need to be in place, just as you're a regulated firm. But there's also a number of elements here from a structural setup around your fund. There would need to be a new AIF notification made to the FCA. Now, importantly, it's very important from a time frame perspective that you're conscious that that can take up to 30 days. We've seen in the market in the past, some people getting caught out that we're ready to go, we want to launch our fund, oh, we haven't done our AIF notification, and the FCA, for no rhyme or reason, has taken the full 28, 30 days. That's 28, 30 days of you not earning a management fee on your AUM. So it can have a considerable impact. What's needed for that process, and we'll touch on the sort of fund formation side in a moment, but a fairly close to final draft of an offering memorandum, whether it be a prospectus, a private placement memorandum, a limited partnership agreement, that's put forward as your AIFM or your principal firm notifying the FCA that there's a new AIF coming to market. To finish off on that compliance framework, a lot of the things that you've naturally been involved with at your previous firm, things like completing PA dealing processes or AML training on that multiple choice questionnaire on should you receive a bribe from Tom in Kuwait? No. A lot of that training and development is done within that 1 to 5 week period to launch your fund.
Great, thanks very much, Andrew. One of the things I've been doing increasingly over the last few months as I've been weighing this up, as well as speaking to friends and peers in the market, I've been going to a lot of these industry events. What has absolutely amazed me is the number of people out there, the number of different service providers, administrators, depositories, prime brokers, MiFID II, you name it. Can you guys plug me into everyone on the street? Who do I need to be speaking to?
It's one thing that can really get you down when you think, I want to launch my hedge fund, and you spend the next 2 to 3 weeks slightly kicking the tires and understanding of what that actually means. There is a huge array of people that can be involved for your launch. Importantly, there's only really a couple that are absolutely essential. Spokes to the wheel that really need to be in place in order to you succeed in launching your fund. For example, an administrator. You have a fund vehicle and they will administer your subscriptions, your redemptions, strike a NAV, and provide general administration for the fund. They need to be there. A depository. Now, a depository was introduced in 2014 under AIFMD. That may or may not be relevant for you. Essentially, dependent on the scale and reach of your fund and the AUM, 100 million euros is the threshold to operate in a large or a full scope AIFM capacity, at which time a depository is required. An auditor. You will need an auditor on your fund. Importantly as well, as you build your track record, that you have an audit in place that will provide that track record for future investors. Independent directors, another element that needs to be incorporated into your fund launch. Prime brokers, an essential part of your trading strategy. For nearly all liquid trading strategies that we've seen launched over the past 18 months, there is an element of a prime brokerage relationship. Now, in our experience with people launching or starting up a new fund, it would be nice to go and knock on Goldman Sachs' door or Morgan Stanley or JP Morgan, but in many cases that's just not viable. So there are a number of very good quality tier 2 service providers out there that are willing to take you on as a smaller manager. Importantly, coming back to that principal firm's relationship, they will manage those relationships. There's ISDAs in place and they will negotiate the way in which your trading strategy can be incorporated into that execution and prime brokerage relationship. Lawyers, they will be responsible for the structural setup of your fund. They will form the investment vehicle and they will provide corporate and tax advice on how you set this up. A shareholder arrangement, a limited liability partnership, a limited company. These are all the things that are very important to be considering day one, because you don't want to provide a hurdle month 18 as you're growing to a multi-$100 million fund. Then we start to get into a little bit of what I'd like to call the nice to haves. The don't really need this day one, but if I had working capital and maybe an investor backing the working capital elements of my business, I might look to employ a placement agent or someone that I can pay on retainer to go and raise capital for me. Things like IT outsourcing, going and getting the best OMS and PMS systems. Bloomberg. Office space is another great example of, do you need to have your permanent 8-person desk in a marble office in Mayfair, or should you consider doing some co-working or WeWork type arrangements? These are the considerations that you need to think from a service provider perspective.
Great, thanks very much, Andrew. Just tell me for a moment, I'm struggling to get my head around how this would work structurally. So the relationship between the fund, the investment manager, myself, maybe the other providers as well, say a prime broker, administrator. Can you try and show me this structurally, how this looks?
Sure, and I think visually, I've got 2 slides here which graphically illustrate this and surmises much of what we've discussed. For the viewers that are looking at the presentation, if you consider the appointed representative type model that we've discussed as option number 2, that's you in the top left-hand corner. Again, I've referred to this as XYZ Capital. That's the result of that 1 to 5 week onboarding process, at which time you receive your own identity, you'll have FCA registration numbers, you'll be able to show your investors that you appear both as a firm and as individuals in an FCA regulated capacity. Now, in terms of running a fund, you operate as, firstly, the appointed representative, and secondly, as an investment advisor to your principal firm and the investment manager of your fund. And you'll see that entity sitting in the bottom left-hand corner. From a regulatory and compliance standpoint, it's that principal firm and regulated AFIM that's becoming party to your fund documentation as we go diagonally up to the right-hand corner of the screen where your fund is. Now, that firm will become party as the investment manager within the offering memorandum and provide the regulatory framework around you and your team being portfolio managers. Now, by no means is that principal firm replacing your portfolio management prowess. You are the experts. And in many cases, that principal firm will have a diverse range of hedge fund strategies on their platform, whether it be long short equities, managed futures, distressed credit, to name a few. If you think bottom right of the corner underneath the fund, these are the elements of the service providers that you as a manager would need to have in place around your fund.
Okay, fantastic. Now, one of the things that I've noticed from my preliminary discussions with lawyers is that setting up my own standalone fund, whether it be Cayman, Ireland, Luxembourg, is potentially hugely costly. In some cases, lawyers have been speaking to me about 80,000, 200,000, 250,000 in some cases to set up my own fund. So standalone fund, fantastic. Is it necessary from day one? What else should I be looking at from day one?
Now, something we've seen gain huge popularity and has seen as a lot more interest over the past 18 months to 2 years are startup and emerging managers utilizing what's known as an SPC platform, commonly referred to as a segregated portfolio company. Now, these are a fund platform. Now, I've graphically illustrated this on the screen now, and you'll see that there are a number of similarities to the previous screen where you're running your standalone hedge fund. The left-hand side remains constant. The right-hand side, a lot of the legwork that goes into setting up your own fund on these SPC, and I colloquially refer to them as a plug and play hedge fund solution, have been done. These platforms have been pre-structured. Now, what do I mean by that? What I mean is there is a private placement memorandum that's already been created. There are administrators in place. There are depositories in place. All of those agreements have been finalized. There are directors in place. There is an auditor in place, and there are offshore and onshore counsel in place for your fund. Yourselves as an investment manager simply complete a supplement, which for all intents and purposes can be viewed as your mini PPM. That outlines your investment strategy. It gives a biography of you and your team, and also dictates how you're going to be remunerated for the management of the fund. So taking the regulatory hosting element, launching your own fund to one further step in these SPC platforms can also provide you with your fund vehicle.
Fantastic. And do you actually have this? Do you offer your own SPC platform? Is this something you're able to help me with if I was interested?
Yes, Lawson Connor within the group provide an SPC platform. Our platform is domiciled in the Cayman Islands and is titled the Discovery Investment Management Platform.
Fantastic. Hugely useful, Andrew. Thanks very much for all of the information. Plenty for me to be getting on with and thinking about. And thanks everyone for those listening as well.
Yeah, thank you, Andrew and Joe. I think really very informative and relevant discussions. I'd like to thank everyone who listened in today on the webinar. If you have any questions or follow-up, want to schedule any follow-up meetings, please see the contact details on the slide now, and feel free to reach out. We really look forward to collaborating with all of you. Thank you so much. Bye.
Thank you, everyone.
Thank you, everyone.